Hello guys, on today's video I'm going to be showing you guys how I backtested gold. Like I cut my trading view chart, and I want to retry again with the same strategy on how I cut the same profit, or how I made the same profit rather. Sorry. So now let's dive into our chart. Now as you can see on gold, normally if you go to the higher time frame, which is the 4 hour, I use 4 hour most of the time to check out the direction of the trend. So you can see we're on like uptrend for a while. So now I can still see the same uptrend here because we're having series of higher highs and higher lows. Let me show you with my two: higher high, higher low, equal high, because it did not break past this level here. So it's equal high, then higher low, because it was higher than this one. So we had a higher high here, and this was our higher low, and another higher high because it was above this. So and another higher low. So we're here now. Let me delete this. I just wanted to show you guys. Let me move this to the downside. So let me delete this. So I'm going to play the video now. So let's see what happens next. Let's see what happens next. So now we're looking at the chart. We're looking at the candle playing out, playing out, playing out. Okay. Now we had our higher high. Then price started rallying down, breaking this low, which is this now. Which was this? Because this was our higher low. Then this was our higher high. Now we had our higher low here, but price broke and started going lower. But unfortunately, this is still an uptrend. You can't use this is still an uptrend. So let me delete this and play the video again. Okay. Okay. Yeah, exactly what I said. Now as you can see, we had our buyers still going uptrend. We had the chart still going uptrend. So what I'm going to do is, as we broke this level here, because this was a break, this is a break. Now after price went downtrend, price was making this was our higher low after this place. So price went made a higher low. This was lower high. This was the lower high, lower low, lower high, lower low, lower high, lower low, equal high. Now we had another low here. We had another low here. Now price broke to the upside. On a normal time frame or a normal chart, this is a break because it's changed character within this period, within this place. So we had a break here also. So what we are going to do now is move down to the, let me set this way. Okay. Move down to the 1 hour time frame and check what's happening. Now as you can see on the 1 hour time frame, we had the break in structure. What we're going to look for is, after a break of structure, what you are supposed to look for is a point where you have an order block and a fair value gap, like a strong fair value gap, before you find your entry. So now, if we are looking at this point, at this chart, if you are looking at this chart, this move to the break, this was equal. After it swept, it's actually swept this place though, because of this weak eyes here. So now, after we went to the downside, if you are looking at this point that price made, you can clearly see that this actually did not, any of these candles here did not actually cause the break of structure. This one here caused the break of structure with this impulsive fair value gap, and the fair value gap was not actually, it was not totally filled because it still had space here. So what we're going to do now is we're going to draw the order block that caused the break of structure, align it out. We're going to watch what price does afterwards. Now let me play the video here. Now let's watch how price acts. Let me check out something. Now let's watch what price does. This is just the same strategy I use over and over again to catch the market. The same strategy over and over again to catch the market. And I'm not going to say it's 90%, it has a 90% win rate though, because no strategy is perfect. So this is what I just use. Now I'm going to watch how price what plays out next. I think I should make this faster for the video. Okay. Liquidity and the rest. Okay. We had our touch, as you can see. On a normal note, rather, I'll set my limit, which is my buy limit, at the top of the order block, which is here, right, for an entry, and targeting the high that I made, which is this high, the first high that is made. I'm not even talking about this one, the first high that I made, and my stop loss should be below this low, but anyway, not anywhere close to this point, because price misbehaves. It might be at this line, this line, or below this low, which is this low, which is this low here, this one, yeah, or at this line. So let's just say at this line. Now let's watch what price we do again. We also had a break, because this was this point, at this point, this point was a low, and this was a high, and this was a low. So we had a break here, but let's see what price does. Now let me reduce the to 1 and play the video again. Okay. Okay, you can see what price is doing, right? Price came back. If I wanted to enter again, price came back to the same zone, the same candle that made this break of structure. Let me outline it. This break of structure now, because this was also a break of structure. Now, so we are going to outline we're going to draw a box, which is aligning the candle now that caused the break of structure. Then I'll enter or second trade at this point, because this is a clear confirmation that price is rejecting on this zone. So I'll enter again, still targeting the same pips, with stop loss lower than the other block. So let me play the video and see what happens next. Okay. For the purpose of this video, I'm going to fasten up this part whereby I'm playing this chart. I'm going to fasten up this part. So let's see what happens faster. Now you can see what prices is doing. See, TP hit and then boom, we had our money. So this is exactly the strategy I use, and for the market, just three criteria. I mean four, because one, you look for the direction of the market. Two, you are going to look for a break of structure and a valid candlestick that causes the break of structure, either bullish or bearish at this point, because sometimes I have scenarios whereby I have bullish candles that cause break of structure. It might not be, it is not always bearish in an uptrend, you understand? So break of structure, either an opposite candle or the same candle that caused the break of structure, and a fair value gap. It must have a fair value gap, because prices are always drawn, or price action are always drawn to fair value gap. It's like a liquidity space to cover up to fill out the gap, you understand? So that's what is going to draw price back to that other block. So it needs a fair value gap and a break of structure. So those three things, and you are going to align, use the block, draw a box around that your other block, so that you are going to know the exact point you're going to enter the trade, you understand? So that's what I use. That's the strategy I use, and for the win rate that I get most of the time, I would say it's 70%, 70% to 80%. I will not lie. So that's what I can say on this strategy that I just taught you. So thanks for watching, and please follow for more videos like this, and like. You can also comment what you think on what I just analyzed too, so we can actually have a conversation on it, you understand? So thanks for watching, and see you later.